You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. Bitcoin, Ether, Ripple, Litecoin, and more. Cryptocurrencies and other digital assets are taking the financial world by storm. This exploding market provides everything a savvy trader needs: volatility, volume, and liquidity, provided you know how to find it. That's where we come in. Welcome to the Crypto Rundown. Each week we'll break down the latest trading activity, trends, and developments on everything from coins to tokens, futures, and even OTC options. If it's moving the crypto markets, then you'll find it on the Crypto Rundown. Now it's time to dive into the exploding world of cryptocurrencies and digital assets. It's time for the Crypto Rundown.
All right, everybody. That music means it is time once again for the Crypto Rundown, the program where we break down all of the explosive happenings over there in the world of crypto. So we're talking the spot, the futures, the options to some degree, depending on what's going on out there, the vol, the term structure, the skew, all of that good stuff. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting The Options Insider Radio Network. You know, new people are discovering this show all the time. So first off, welcome. Secondly, you picked a great week to join us. There's a lot popping off in the world of crypto to sink our teeth into this week. And joining me to help me parse all the volatility, the Sturm und Drang going on in the world of crypto is Josh Green, the head of trading over there at Digital Asset Capital Management. Josh, welcome back to the Crypto Rundown program.
Hey, yeah, I can hear you. Sorry, it just cut out as soon as you started talking.
Of course, because why would technology work when you need it to work? What fun would that be, Josh?
That's right, exactly. As long as the trading lines work better than that.
Well, Josh, you were on the show, but it was quite a while ago. It was back in March. In fact, early to mid-March, which I believe is before the worm really turned on the crypto market. Of course, judging by this week's activity, maybe the worm is turning again. Who knows? We'll get to that in a little bit. So maybe really quickly, because I know we've had a lot of new listeners join the program since the last time you were on, really quickly give our listeners a little bit of a quick overview of what you guys do over there at Digital Asset Capital Management, sir.
Sure. So we run a crypto-only hedge fund, basically investment firm. We've got 3 main funds, 2 which have been going for a while and 1 which is much newer. So our kind of flagship digital asset fund started in early 2018 or late 2017. That's basically what you would expect. It's like I call it like almost like a deep value equity fund. So it's a long fund holding kind of 10 to 15 positions from both large to small caps. Typically about 70% in the top 20. Although that's quite concentrated, so often we'll only hold kind of 3 or 4 of the top 20, and then a smattering of other stuff, some ICOs, and a bit of lending. And then we have a a VC ICO fund, which just came from natural demand for that product due to the ICO performance in our digital asset fund. And then we launched it on the 1st of August after trading just internal partner funds for several months. Daft Greek's fund, which is an options-only fund, trading options on any cryptocurrency that has an option, which right now is predominantly Bitcoin and Ethereum. So, that's the short version of the business. So, obviously weathered the crypto winter, and then we've seen a good uptick in interest from investors and counterparties since the market's turned around this year.
We're going to get to this week's big turn as well. But before we do that, like I mentioned, you were on back in kind of mid-March of last year. So right before the worm turned and we saw the tail end there of crypto winter and this pronounced bull market we've been on until recently. So really quickly, before we get to this week's activity, walk us through what the previous 6 months were like. Pretty much almost the second you got off the show last time, we saw Bitcoin and everything else just turn around and race north. So what's it been like managing these funds in that environment over the past 6 months?
Yeah, so, in terms of the ICO fund, that fund is basically kept in fiat unless an ICO is listed, and then it goes, sold back into fiat, basically. So that fund hasn't really changed much. In terms of the long fund, obviously that's been a lot better, a lot funner. So that's just been kind of curating exposures as they move around, trying to maintain, a good amount of length to the market with some power to buy dips whenever they happen. And then the main, thing for that fund has been the Bitcoin dominance versus altcoins, because we have both altcoin and Bitcoin exposure. So just trying to manage that, as Bitcoin has had the huge outperformance for a multi-month period up until recently. But that fund's kind of just been staying core long, and continually looking for opportunities and trimming the book around the edges where necessary. Like, when it was getting crazy, to 14K. And then the options funds, given we try to maintain a bias to be long convexity, long volatility. So, that big run up involves from kind of 40 to 50 vols, all the way up to about 130 in the front end. Gamma was, realizing very well as well. So, a bit more dislocations in the curve. So it was a really good environment for the Greeks fund. Especially given we try to keep that fund, more non-correlated to market price movements. But there was plenty going on in the option surfaces and whatnot. So, Gamma was, vols were probably a buy at 110 vols in the front end, because Gamma was realizing at 160 for a while.
That brings back the old adage, right? That sometimes when vol is extremely high, that's when you want to buy it. Conversely and counterintuitively, when it's very low is maybe when you want to sell it, because it tends to continue in those extremes for a little bit. So let's get on to, speaking of extremes, let's get into this week and this past week and even today, because we are once again in that extreme end of the curve there. By the way, all of you out there who are interested in the Bitcoin options, I encourage you, if you missed it last week, I had a good conversation with Tim McCourt, who runs all the crypto over there at CME Group, in terms of why they're announcing these Bitcoin options now, what can we expect in terms of timing and everything else. So all those questions you guys have, I put it to them. Check it out on our TWIFO program, This Week in Futures Options program. We recorded that last week with Tim. If you're listening to this on demand, you can check it out earlier. If you subscribe to our full network, then check it out. If you're not, if you just listen to Crypto Rundown, again, I encourage you. Get the full network, and you'll see that program there. But let's fast forward to this week, and what a week it has been. Pretty much since the moment we ended our show last week, we've seen a pronounced turn out there in the crypto market. In fact, the high of the week came pretty much during our last show, and then it sold off over 1,500 handles pretty much since our last show, and then a little bit of a maybe warm turning again towards the end of the week. So we hit the high again pretty much on show day last week. It was about 98.27 around that level, and then we saw it sell off very aggressively on Tuesday. Of course, it's on the heels of a lot of crazy tumult unfolding in the broad equity and the broad markets as well. Got down to 83.64 on Tuesday, broke 8,000. Hit 79.43 on Thursday, and was trading actually just this morning, earlier in the session today, was trading 77.63, and now has managed to rally coming into showtime. We're seeing hovering around that 82.90 odd level. It's like 82, actually coming off a little bit again, down to 82.28 again. So rallied hard this morning and then coming off a little bit. Still off about 1,500 handles from this time last week. So a very tumultuous, a very volatile week. Of course, looking at these numbers, if this continues into the end of the month, which we're getting close to there, that means we're looking at pretty much a 3.5-month low that we hit this week, and also threatening pretty much to look at our first quarterly loss since the whole crypto winter debacle. So Q3 looking like it could be down around somewhere around 25% if we hold these levels again, kind of mitigating all that nice bullish turn we saw there into the teeth of Q2. Again, looking at how our friends parse it over there on Crypto Patterns. They've been on the show many times, and they post this over there at the Options Insider as well, looking at how Bitcoin has indeed, referring to that dominance rate that Josh was talking about earlier, led the whole market down into what they're terming a breakdown phase, dropping well below key levels. And also they're saying that increasing volume to the downside makes them skittish about doing the old buy the dip trade that I know a lot of you out there like to do. So if you're thinking, hey, this is the dip, maybe not so much. Of course, that was before today's rally, so maybe that worm has turned a little bit out there. Of course, the narrative isn't all negative. Bitcoin's still looking pretty robust on the year, up about 115%. It hit its low of 3,400 back in January, so we're nowhere near that right now. So I suppose if you're bullish out there and looking for a little bit of optimism, a ray of sunshine in this past week of madness, well, then that's pretty much it. So Josh, once again, you have good timing here coming on the show in a week when things are actually popping off in the crypto market. We're seeing these aggressive sell-offs and then just as dramatic turnarounds this morning. Walk us through what the last week has been like over there. What's been lighting up your tape? What's been catching your eye over there at DACM over the past week?
Yeah, I mean, obviously everyone was watching the big consolidation, triangle or wedge or however you want to draw it, that Bitcoin had been in from kind of 14K all the way down to that breakout level or breakdown level, around 9,300 to 9,100. So like everyone else, we were kind of watching that. We expected some back to be a potential catalyst for either a break higher or lower. To be honest, I probably was biased that it would either price in some bullishness prior or you get a break to the top side, but obviously worked out the other way. I think people were just a bit disappointed in the volumes that showed up to start with. Then you also had some fall in hash rate power, which spooked people rightly or wrongly. And there's been some articles written about some big transfers that were potentially sold on exchange of around a yard or slightly over a yard. So I think those three things kind of just caused a breakdown. And then, it's classic crypto. It's a highly leveraged market. It's also a thin market given how quiet things had been. I think there was quite a bit of stale positioning. And once that kind of 9,000 level went, it was just, a big candle down, a big stop run. That you saw about over 500 mil of liquidations on BitMEX. So it seems to tell that story on that high volume flush. And since then, I thought the market might move around a little bit more. It's been pretty quiet since then, really. So just kind of consolidating since then. You had the little move higher over the weekend just after the close of the week of CME, which is pretty standard for it to have a little move there. And then we'll see where we go from here.
And you guys obviously trade a lot of the options over there. Do you primarily focus on one venue? Are you BitMEX? Are you Deribit? Do you kind of dabble? Where do you do the largest percentage of your trading these days?
In terms of options trading, I guess I should say like vols have come down a lot over the last couple of months. So they were kind of come down from 100, 110 down to about 70 in the front just before that big move. So my options had cheapened up a lot. So we were kind of looking, and there was no, there was about a 3 vol kink in the curve for backed earlier in the month, but it was pancake flat as of last week, basically. So there were some opportunities around buying some kind of wingy stuff over the event to play the breakout. In terms of the trading venues, so it's pretty similar to how it was when I was last on the podcast. Most options trading is done via Deribit, or it's done OTC for some counterparties. there has been some shifts in the landscape. You have a platform called Paradigm now, which is a block trading venue that STPs straight into Deribit. So most of the kind of institutional players who are active in the options market are on there, and that's where we tend to do most of our trading now because you can get bigger sizes done, obviously, and you can do multi-leg stuff with no execution risk. So we still tend to trade mainly Deribit and bilaterally OTC, but on Deribit we're predominantly using a new platform called Paradigm, and there are a couple of clearing solutions that are getting quite close as well, which will be good when that happens.
You do have the advantage also of being domiciled over there in Australia, an area of the world that, shall we say, from a regulatory perspective, a little bit more favorable to the crypto markets. There's a reason why we had the Acuna guys and everyone else and you guys on. It seems like the vast majority of our guests seem to come from that portion of the world because there's so much going on over there because, quite frankly, the regimes there are a little bit more favorable here. And we've had SEC Commissioner Hessner Peirce on the show, and they're doing their best to look into it, but obviously a much larger machine over here. Getting that to turn is kind of like turning the Titanic sometimes. So things moving a little bit slower over here on the U.S. front. You mentioned Deribit, of course. That's where we like to look for our volumes and our vols as well. Of course, all these skews, all these metrics, I should say, courtesy of our friends over there at Skew SK3W. Check them out. I heard it's got a new round of financing. I have to bring them on the show because there's a new coat of paint over there on the website. So it sounds like things are popping off over there in Skew land. Congratulations to those guys. But looking here, you mentioned the vol has come in across the board. Last week, of course, the realized ticking up a little bit. Go figure. Things are actually happening out there. We're looking at 30-day realized out there. It's a bit of a longer time frame, gone from about 39% on our last show to 56% this week. So a nice pop. Also a nice pop out there in the volume. You know, seems like there's been a narrative for a while here where we see some extreme moves in the underlying, and yet we don't see commensurate volume on the options, at least looking at the Deribit numbers here. This past week was an exception. We saw some decent numbers going up there. Remember, we like to use that 30 million as a bit of a barometer for a pretty active day. Below that, not a lot going on. Above that, maybe you can sink your teeth into that. And we had a lot of days over this past week over that 30 million level. In fact, the biggest day came last week during showtime, 116.5 million on the 23rd. On the 24th, next day, Tuesday, 55 million, then 25th, 64 million, then on that crazy sell-off again, and 82 million. I don't have today's numbers in front of me, but we'll see if the worm is turning quite a bit. In terms of what we saw, size prints out there, kind of some weird stuff. Remember we were talking last show how there still seems to be some premium harvesting going on, at least for size contract specs. Remember, read into that a little bit as you will. The size prints out there, not always the size premium trades or anything along those lines, but size number of contracts. The biggest one going up on Deribit this week was a 400 lot of someone blasting out the Nova 13,000 calls. So a little bit of upside, probably a little bit of a covered call, perhaps there if I had to wager over there on Deribit. Also, it's like someone maybe drawing a line in the sand last week, blasting out about 200 of the SEPT 7,000 puts. Those expired last week, actually, so I think they were safe on those, doing that 200 times as well. I love when they quote prices and fractions of Bitcoin. I still can't wrap my head around that. 0.001 was the price when, of course, at the time, though, Bitcoin was threatening that 8,000 level. So 7,000 didn't seem like it was that far away compared to where it was a week ago. So, Josh, obviously you trade a lot on Deribit. That's where you put up a lot of your volume in addition to OTC. Are you seeing any interesting trades going on out there on the options this past week, sir?
Yeah, so, I mean, we don't have any, we don't, do any sales to clients or anything like that. We're purely running buy-side money. But just in terms of looking around and seeing what's happening and talking to people, I think there's been a little bit of interest lately in doing the risky, so buying the or selling the put after the move. There's some people looking to sell some wing, given the vols have gone from 70 to 90. There are a few wing sellers out there. Prior to the move, I heard there was a decent amount of downside buying from miners, so they've done quite well. Presumably, I think there's been a bit of covering of that going through in the ATC markets as well. That'd be the main flows, I guess, that we've seen recently. I think, as you said, realized did have that pop higher. Obviously, on the 30-day, you have the roll situation. So, given a lot of those very boring days are going to be rolling out, I don't think you'll see that long dated realized going back down very particularly low. I mean, if you look at it on like a more high frequency basis, on the lower time frames, right now the lower time frame 7-day realized is about 100. So, the front end options are trading about 90 volts, so like broadly fair, I guess. It's 35, realized 35 yesterday, which wasn't particularly helpful for those long gamma, but that's probably to be expected.
Yeah, well, I mentioned that vol. It has been interesting to watch that obviously popping a bit out there over the past week as well. Last show, we were a little bit shy of a 65 in those contracts that were going out last week in terms of front month implied. This week, obviously, ticking up a wee bit, looking at that term structure. Again, it's still kind of funky how it kind of gaps up in the front, then gaps up in the rear with a little bit of a hiccup, I guess you can call it there, in that October 11th weekly contract out there. We're at a little bit shy of an 87.5, closing in on 88 right now on that front contract. So vol obviously ticking up, and you get out to Dece, and it's threatening not quite a 90, getting up there though. So obviously a wee bit elevated compared to this time last show. Looking at how all that activity is breaking down, the call to put, we're seeing a little bit of an evolution on that. The call to put down from about 55% last week to about 47% this week. So obviously puts taking charge. I don't think that's going to surprise anyone given the pronounced sell-off that we saw over the course of the past week, that puts are maybe leading the dance right now. Remember, that's off from the peak. The peak we saw of the call to put was about 84.5 back a few months ago or so. OI also changing. Actually, a lot of it came off the board last week. We had a lot of contracts that were September 27th and all that obviously off the board now. So we're down from not quite a max, but pretty close to it here with their Deribit of around 641 million. The actual max they've had out there is 658, so pretty close to the high record level for open interest, down now to this week to about 352 million. So a lot of it has come off the board since last week. Some of that also maybe as we're retreating to these lower strikes, maybe other strikes are getting a little bit more into range. People haven't really decided to open up there yet. We'll see. Obviously, though, a big change here OI-wise. Looking at the futures, it was probably, as you might expect, a pretty active week out here on the CME futures. Coming into showtime today, a decent day, about 5,000 contracts in that front OC future, and about, it looks like another 500 or so on the other months. So you're talking about 4,500 or 5,500 contracts, I should say, out here. But the rest of this past week was pretty active. Friday, 4,100. Thursday, the big day, as we saw that big sell-off there, 9,300. Wednesday, 8,100. Tuesday was the number one with a bullet, 14,300 going up on Tuesday again, as we saw that pronounced turn to the downside. And Monday, right around 6,000 there. So pretty active time out here. I know you mostly focus on the options over there and a lot of the ICOs, as you mentioned as well, Josh. Do you guys play it all in the futures, whether CME or some of the other out there, the perpetuals, all these crazy futures out there? Or are you guys strictly on the options side?
So I mean, the Greek fund is strictly options. Obviously, we trade a lot of that, a lot of the perpetuals and futures against them, though. So we are quite active in those products. And then the long fund we tend to hold physical, predominantly physical Bitcoin. Not much. We get enough leverage from micro cap listed coins.
And so the notion of the announcement of these listed options coming on the futures for CME, did that maybe perk your ears up a little bit? Are you guys thinking about maybe diving into the options on the futures there? Or are you going to kind of play the wait and see? Because obviously they haven't listed yet. They're talking sometime in Q1. We don't have any insight any further than that. But is that something that maybe has intrigued you guys over there?
Yeah, I mean, we'll probably look to trade them to get involved in that. I think I'm not sure it's going to be a big vol event per se, but I do think it'll be quite good for liquidity and for price discovery as well. I mean, as I'm sure you're aware, a lot of the volumes in the options market right now are at the front end of the curve, which is fine. But I think with the CME, maybe you get some more instos or more traditional players in there. So I don't think certainly can't be a bad thing. And CME, they know what they're doing, so I'm sure it'll be a good product. So we'll be getting in there. Yep.
Before we roll into the altcoin universe, anything else lighting up your tape over there, Bitcoin wise, in terms of what's coming across your desk, what you're seeing out there? Any interesting analysis or trades that are really lighting up your tape this week?
I think the only major interesting thing in Bitcoin, at least in the vol markets right now, is just the move in skew. So front end skew, unsurprisingly, after the sell-off has taken a battering, it's kind of gone from flat, small positive down to about negative 12, negative 13 vols now. So and then it doesn't really get positive until the very back end of the curve, though it flattens out quite a bit. So that would be like October NOV. OCNOV is quite steep. So the front end skew, I think that's interesting, and it'll trade quite correlated to spot, but it's at a pretty extreme level right now. Obviously the vol curve, shifted up higher, but then flatter, and now has gone pancake flat again. So just looking for that to, I think maybe it flattens again, but looking for some more shape in the curve, and then there'll be things to do in the vol curve space.
Also, things to do in the altcoin universe, so let's get to it.
It's time to move beyond Bitcoin and find out what's moving the rest of the crypto marketplace. It's time to boldly venture into the altcoin universe.
All right, everybody, let's do it. Let's talk some altcoin. A lot popping off on this side of the fence this week as well. Let's start, as we are wont to do, looking at the overall market cap. Remember, take the overall numbers with a bit of a grain of salt. I think the percentages, though, are a little bit more reliable. Bitcoin, obviously, still number one, leading the dance, about $147.5 billion out there market cap. Number two, ETH, a little bit shy of 13%. That's about $19 billion out there. Number three, good old XRP. Interesting times for XRP out there. About a little north of $10 billion. That puts them a little bit shy of 7% overall market cap. Number four, Bitcoin Cash, a little bit north of $4 billion. Puts them about 2.75% market cap. Number five over there, Litecoin, with a little bit, just about $3.5 billion, puts them at about 2.4%. Let's throw in good old EOS as well. I know a lot of folks out there like it. We'll go out to number six. Why not? EOS at about just a little bit shy of $3 billion. That puts them at about exactly 2% overall market cap. But obviously a lot happening since our last show here. Let's start with ETH, as we are wont to do here. Got pretty much annihilated since our last show here. Really, really not a great week for ETH, even though comparatively, you look at it over the course of the month, ETH is kind of where you want it to be. But a bad week for ETH, off nearly 30 handles from last show. It was, about 207 on our last show, 207 and change, and coming into showtime now, it's actually given up a couple more. It was 178.5, now it's 176.5. So, yeah, not a great week here, over 30 handles now for ETH on the downside. Of course, the folks over there, I believe it was CoinDesk, they were crunching the numbers for the month, and if you look at how well everything performed over the course of September, ETH actually eking out a slight gain, 0.3% to the upside. Of the other top 10 cryptocurrencies, it's the only one to the upside. Bitcoin down 16%, XRP down 2%, Bitcoin Cash down 19%. The loser of the month, Bitcoin SV, down 35%, Binance Coin down 28%. So it's been a bit of a bloodletting for the month of September. So I guess despite the fact that ETH got hit pretty hard this past week, I guess comparatively it's where you want it to be over the course of September. Ripple also having a tough week. Good old XRP. Remember last week we were hoping, hey, is this it? Is Ripple back? Remember it threatened 32 so briefly, then got down to around 28, 29 again. Well, it looks like it's not back, at least not right now. It's back down below the 26 level. That's about 25.3 right now. So not another good week here, unfortunately, for all you Ripple fans. I know you're out there and you are legion, but not another upside week for you guys. Litecoin also taking a big hit, down 16 handles from this time last week. This time last week we were at about a 72, and now actually it's come off even more, down to about a 55. It was a 56 before, now about 55 coming into the latter portion of the show here. Our friends over there at Crypto Patterns, they not big fans of a lot of the altcoins. As I said before, a lot of the analysis doesn't really hold, but they did some interesting analysis of Litecoin, I think because it had such a precipitous drop this week. Largest drop in months, falling below what they had deemed to be a key support at 60. Now the next support they're saying is lining up around 50, so not even 55. They're not even looking at 55. So they're a little bit skittish of Litecoin. They're looking, again, 50 is where they're thinking about trying to line up if you have to make a bullish case out there, not $1,255. And Bitcoin Cash, another one, just beaten up since our last show, down about 77 handles from where it was this time last week. It was north of 300, 305. Now it's at about 226, also shedding a little bit of that as well. So just a drubbing over the course of the past week. So again, it's kind of hard to find a lot of bullish sentiment out here in the altcoin right now, unless you're looking back across the course of the entire month, in which case you can make a slight argument for ETH versus everything else. But outside of that, not a lot going on. Josh, it's been a rough week out here in the altcoin. A lot of blood on the screens. Anything catching your eye? I know you like to play in the major ones out there. Which of the altcoin is your biggest focus over there at DACM?
Of the ones you mentioned, at the moment, it would definitely be ETH. I think ETH versus Bitcoin made quite a big low, around 1,600 sats, and then obviously had a dip when the market had that big fall, but it's bounced back very strongly. And I think if you're long ETH, given what's happened in the market, you probably couldn't ask so much more. It's a pretty good result, really. Kind of tested that 150 a couple of times. That was resistance, turned it into support. Now it's testing back up into 180 to 185. Which, there's probably some wood to chop there. So I think, on a relative basis, as you alluded to, like ETH's definitely been a good one. That's traded very strongly, and I think there are still fundamental positives about Ethereum in a market that was very negatively, had a lot of negative sentiment around it, and that's probably driven a lot of the rally. In terms of the others, Litecoin above $50. I think that's a fair level. It's a nice round number. It's got some support there. So while it's above 50, that probably seems okay. We don't hold any Litecoin for what it's worth. And Litecoin, obviously, it had the halvening. It's not the first time that it's had a big run up into the halvening and then has sold off / treaded water until Bitcoin has its halvening, and then it has its kind of big second leg. So, that might be something to potentially watch for. Yeah, Ripple, was so close. A lot of the other charts look quite similar, I think, in that, they were all kind of fairly big, and then obviously everything, correlations in crypto, for example, amongst the altcoins are very high, and in a time of stress, they're even higher. So, unsurprisingly, all the charts kind of look like they were rallying, and then they were, broadly okay, and then, got smacked down, and now it's basically consolidating at the lows, kind of trying to see if that was a blip lower, or if it's something more ominous. And realistically, I think that's probably going to be still led by Bitcoin, and if we've seen the low in Bitcoin, or if it starts chugging back higher from here.
You guys do a lot of spreading between the coins, like maybe ETH versus Bitcoin, if you see a little bit of a disassociation between the two?
Yeah, we look at them both versus other coins and versus the dollar. I think our funds are all fiat denominated, so we have to be looking at things versus dollars. But if you do have a thesis that, say, Bitcoin over the long term is going higher, it makes sense to also be looking at things versus Bitcoin. Can they outperform it? In the options fund, we do trade things like ETH versus Bitcoin vol. So we're looking at those markets from an options perspective as well. And then, you are getting some options on altcoins now. So Binance has released some options on some altcoins on their JEX platform. And there are still a few OTC, still a few people sniffing around OTC with altcoin options at a pretty high vol. But yeah, look, I think my personal view is that the Bitcoin sell-off, while not ideal, is not the end of the world. It's kind of done what you would expect it to do in kind of a bad correction in a structurally bullish market. Could we go a bit further? Yeah, potentially, yes, but I don't think it's going to be horror scenes necessarily from here, depending on how you define it, I guess. So I probably think the altcoins will kind of hold up all right. Even on a relative basis lately, they've actually been holding up reasonably well versus Bitcoin. Kind of been like a quasi-alt season, but an alt season where a lot of alts just slightly outperform Bitcoin while going materially lower versus the dollar, as opposed to everything going higher.
That seems to be pretty much what we're seeing right now. I think a good point about Litecoin as well. Obviously, in Q1 into Q2, Litecoin was blowing the doors off everything. It was percentage-wise the best gainer, obviously leading into that halving event. And then you're right. Once the halving event finished, it seems like the case for Litecoin just fell apart. It's just been getting annihilated ever since. So they, as people expected, they bid it up and they bid it right back down. And maybe we'll see now as we're approaching the Bitcoin halving whether we'll see some retracing in Litecoin. Obviously, a lot of people look to the Litecoin event as maybe set up some sort of structure, some sort of pathway for what to expect for the Bitcoin halving. Obviously, Bitcoin a much larger product, but still, I think a lot of Bitcoin bulls out there are hoping that we see at least the former part of the Litecoin chart, maybe not the latter part, maybe not the sell-off that followed, but the run-up, certainly I think a lot of folks out there will take, and I'm sure our XRP folks will take whatever they can get out there right now. Not a lot of love, unfortunately, for our old friend Ripple, but we do have love for you guys out there in the listening audience. So without further ado, it's time to answer some of your crypto questions.
You've got questions about crypto. Who doesn't? It's time to find out the answers to your crypto questions.
All right, everybody, welcome to the Crypto Questions segment, the portion of the show where you guys take the reins, your questions, your comments, your insights about the world of crypto. And do you guys have many to share with us across all sorts of different products and topics and ideas? Keep them coming. We love to hear all the feedback from you guys. Even if you don't answer it on the show, of course, we'll get back to you in some other format. You guys know how to hit us up, theoptionsinsider.com, add options on most of the major social media platforms, or you can use the app or the live chat. A lot of ways for you guys to get in touch with us, just like a bunch of you did here. Let's start off here. Bingo Trader. He's got a thought he wants to share with us. He says, why are they manipulating the crypto price down? Not approving ETFs is tantamount to favoring shorts. I think he sent this in after we aired my conversation with Hester Peirce over there on the U.S. SEC, obviously the big regulatory body here in the U.S. So this gets to one of the hot button issues in the crypto space, certainly here in the U.S., this ongoing dance around an ETF. A lot of people view the launch, the approval of an ETF as really that kind of seal of approval from the SEC and from the government that here we go, now we're ready, now it's a big boy market time, now we're going to see real numbers, real volumes, institutions, retail, all piling in. That's where the worm's going to turn. Others, like we've explored on the show and on this network for quite a while now, think we don't really need the ETF because things are going along pretty well without it. We just had the Gemini folks on not too long ago. They're talking about really trying to fix the plumbing. A lot of other people are doing that as well, trying to get the backbone, the infrastructure of the crypto space up there to the level it needs to be to attract a lot of institutional customers. Of course, a lot of people were hoping Bakkt might do that. We'll get to that. I think we have a listener question or comment about that in a little bit as well. So yeah, I don't know, Bingo, if I agree that not approving an ETF here in the U.S. is tantamount to favoring the shorts. Maybe you can argue it doesn't give a lot of that near-term bullish love that you might expect, but I'm not sure if it's collusion with the shorts on the part of the SEC. This is why I say, Josh, you're lucky. You're over there in Australia. You don't have to deal with this lingering regulatory morass that we have here in the U.S. But what do you think? You think our regulators here are colluding with the shorts by not approving the ETF? Is that what's going on?
No, I don't. I think, I don't think the regulators particularly care how anyone's positioned in crypto or what their P&L is. I think, it's not surprising to me that the ETFs haven't been approved yet. There's, you look at just the other day in the price action and some of the recent events in terms of stops going off on leveraged exchanges based potentially on big flows on physical exchanges, et cetera, et cetera. I think those things are just reasons why it's not imminent, really. I don't think that we're quite at that point where the market is mature enough still, though I think it would be nice, it would be helpful. I tend to have the view that it's not such a big deal anymore, certainly not as much of a game changer as it would have been 6 months ago. I mean, I think in reality as well, you've got stuff like, the President of the United States, not necessarily being outright anti, but, or maybe he just was, tweeting about how he doesn't like cryptocurrencies and whatnot. I mean, that's a tricky political climate for, approval of a lot of things like ETFs as well, I think. So, yeah, I don't think it's imminent. I don't think they're manipulating it either. I think it's just, there's processes and boxes that need to be ticked and things that they need to be comfortable with in terms of how the market works, especially on the leverage side, before they approve it. And they're not there.
How nice and rational and reasonable of you, unlike a lot of our listeners on the ETF side. I'm just kidding. We love all of our listeners out there. But you're right. You're not the first guest we've had espouse that view that maybe the markets don't really need the ETF the way they did 6 months or a year ago. Things have matured, not quite to the level they need to be, but certainly along the way. So they're much better than they were, even like you mentioned, 6 months ago. So it is interesting to see if and when this ETF comes around, if it is the game changer everyone hoped it would be a year or two ago when people were first arguing about and debating this. Kind of a general question here from Talion, getting to what we just saw and what we just talked about at the top of the show here. He says, are you guys concerned about the recent sell-off, or is this just a blip? Well, I don't know about a blip, but I guess if you are bearish, or if you are bullish and you need a little bit of convincing, maybe today's turning of the worm will make you feel a little bit better, rallying close to 500 handles just in the last 24 to 30 or so hours out here, including just today up about 230-odd handles out there, nearly 3% just today. So it seems like at least from the shy of 8,000 level, Bitcoin at least has bounced. Some of the altcoin not feeling all that love, a little bit of love today. So maybe that's a sign that the bearish worm has mitigated, at least for now. Maybe, Josh, you guys are out there looking at a variety of different venues from an options volatility and skew perspective. Along the lines of what our listener is asking here, are you seeing a lot of, let's say, movement in the term structure or indeed in the skew in any of the big venues that's showing, hey, you just mentioned at the top of the show, bullish risk reversals are pretty popular out there right now. So maybe that's a sign that the broad market is taking advantage of this sell-off to position for the upside. Is that pretty much what you're seeing out there? We just talked also at the top of the show about how puts are outnumbering calls out there right now, which I think is probably not a surprise. So what do you have to say here for our friend Talion wants to know if you've seen any paper out there that maybe thinks this is just a blip?
Well, you've also got things like funding on places like BitMEX being negative, so it's now negative carry to be short. So you've got things like that, and then if you look at kind of future spreads and basis spreads, they've gone from quite positive to flat to negative, combined with the huge move in front end skew. I tend to think it's a blip. If you take it from 14,000 down to where we are currently, it's done roughly 40% on the downside, which is pretty much what you'd expect statistically in any sort of major bull market. You have multiple 40% drawdowns typically, so that's not surprising either. If Bitcoin falls, it tends to fall quickly, which can be a bit frightening, but I think there's nothing really to be concerned about. If from a technical perspective, if we start getting below 6, then I'd be very concerned. I think we're likely to bottom out somewhere between here and 7,000, 7,500 in this kind of range. Obviously, not financial advice. And yeah, I think if you do want to position in the options market, unfortunately, if you just want to buy straight topside, while the skew has become a lot better price for those wanting to buy that topside. The base vols have obviously increased a lot. So before you had a higher skew but a lower base vol. Now you've got a higher base vol and a much lower skew, but they probably would prefer to be buying it at a vol that's 30 vols lower. So there are ways to get long. Obviously, you can just buy the calls and think it'll be fine, but there are ways to get long. But yeah, it's a bit trickier now, and there's such a flat vol curve. There's not a heap of stuff in the terms of calendars, but obviously risk is a trade probably best done by those with options trading experience and expertise, given you are a naked shorter put, and how quickly the Bitcoin market can sell off. If you're not, on top of the market 24/7 and comfortable with any negative gamma that you derive into when you hit your short strike, I wouldn't be doing those trades. To be honest, I'd just be kind of waiting for a good opportunity to buy a call, or buy a call and maybe sell, even with bad skews, sell a call, and if the vols come down, take back that short call and just run an outright call for more retail people.
There you go. He's not worried to the 6,000 level, and obviously that's a good point about the vol. The skew make it look attractive, but the net vol is up, so not attractive from an overall vol buying perspective there as well, if you're looking to gobble up some upside here. All right, let's wrap it up here with this last one from Cap Bex. Says, so much for BACT being the starting point of a new huge Bitcoin rally. This sell-off coincides almost exactly with the launch of their future. Coincidence? A question mark. Well, of course, he's referring to, we talked about it last week on the show. The day before our last show, BACT went live with their first futures product. They have, I believe, a daily and a monthly future out there right now. A lot of people were talking up a good game about how this was going to be the catalyst that was going to bring a lot of the institutional paper that everyone's been wringing their hands over in the crypto space. This physically delivered contract was going to do it. Obviously, that makes things like covered calls and other types of positions with the underlying and the options a lot easier, a lot more attractive from that perspective. So people were hoping that this would be the inflection point. That would do it. And as our listener points out, it was pretty much exactly the opposite. I mean, not about a day or so, 24 hours after BACT launch, we saw this aggressive sell-off in Bitcoin, and we're still languishing well below, at 1,500 points below where we were this time last week. He asks, is it a coincidence? I think, of course, I don't think BACT launching was the trigger that caused the 1,500 point plus sell-off in Bitcoin. No, I do not. But yeah, for people out there who were hoping that this was it, this was going to be the inflection point, that we're really going to see this protracted long case really for a bullish exposure and a bullish run here in Bitcoin, at least for the time being. We're not seeing, but again, it's very early days for BACT. They have a week and change under their belt. They've done a handful of contracts, and that's really about it. So we have to see a lot more from them, I think, before we can make any determinations one way or the other. Josh, were you guys over there? Were you excited? I mean, I know you don't do a lot on the futures front, but were you excited about the notion of a physically delivered, physically settled type product? Does that maybe make you more excited? And then B, like our listener is asking here, were you surprised maybe that the worm turned so aggressively shortly after BACT launched, when a lot of people were thinking maybe that would be a bullish catalyst for the overall market?
Yeah, I mean, I think the BACT is structurally very bullish, the physically settled stuff. I think, to the point around an ETF, having things like BACT reduces the importance of an ETF. So I do think over the long term, it'll be a bit of a turning point, and it'll be quite positive. In terms of, the sell-off, look, I think there's a correlation. Is there some causation? I'd be biased. I think there is in the sense that I do think you had some longs, both fresh and stale, in the market hoping for topside fireworks on the back of BACT. So I think once that kind of didn't eventuate, you would have seen some bailing out of those positions, which then, hit some stops and triggered it. So I think there's some causation in that sense. But obviously, as I've alluded to earlier, there were some other things going on at the same time as well. So, it is what it is, really. But yeah, I think it's kind of quite bullish structurally long term. And I do think that maybe people's expectations were a little bit too high. I mean, obviously volumes were on the low side, but, when the futures launched, it was the peak of the bubble, basically, right? So comparing, any comparison of BACT volumes on day one to, say, CME volumes on day one, I think is a pretty long bow to draw given the difference in the market structure and market sentiment at the time. So I'm actually not convinced that it's been that. I mean, the market thinks it's a flop, so, it's a flop. But I think I'm not convinced it's as bad as everyone thinks it is. If it's meant to be kind of more of an institutional product, it was launched at the end of the month. They're more likely, I think, to kind of tiptoe in. Try some, see if it works, try some more, okay, it's one day before month end, let's deal with this next month, try it then, So I think you just kind of got to watch it over the long term. But, I do think it probably contributed to the sell-off.
Interesting. A little causation there, you think. So you agree with our listener there. Interesting stuff. Let us know what you think, listeners out there, if BACT was a catalyst in the worm turning last week, or if other games were afoot. Unfortunately, that music means we've come to the end of another epic journey through the world of all things crypto. We talked, of course, what's going on in the spot, crazy week there, the options, the skew, the term structure, the volumes, what we're seeing on the futures, moved on to altcoin, crazy week in altcoin as well, and we wrapped it all up with your questions. Keep those questions coming. Maybe we'll do an all. We get so many, maybe we'll get an all question show going here one of these days. We only have a little bit of time at the end of the show usually to answer those, but so many on so many different topics. Keep them coming. We love to hear from you guys. And Josh, if folks are intrigued, maybe they want to learn more about what you guys are doing over there at Digital Asset Capital Management, or maybe you want to leave them with a little bit of a hint, a little bit of a tease. Maybe you got a new fund or something else up your sleeve. Now is the time, sir. The floor is yours.
Yeah, you can reach us at our website is www.dacm.io, or I'm on Twitter at Joshua Green DACM. They're probably the best two places to reach us in terms of fund growth. I mean, we're a fund for kind of accredited and institutional investors. So, we're always looking to grow our funds. Pretty focused on the options fund at the moment. And with positive sentiment, and hopefully the worst behind us, there's exciting things ahead.
There you go. So if you're intrigued by what they're talking about, maybe you want to dip your toes into the crypto options waters, maybe you want a fund manager to help you do just that, and indeed you are an accredited investor, head on over to DACM.io. That is Digital Asset Capital Management. Kick the tires over there, overview of the funds, everything else. You'll learn more about what they're doing over there. Josh, appreciate you coming on, you beaming in at this early hour over there. That's the one downside. We have so many Australians on this show, but I know it's so hard for you guys because it's so early. We keep pushing it back, and it's still early. So I appreciate you getting up bright and early to talk with us today, Josh.
That's fine. 6 o'clock's a lot easier than 5 o'clock.
Yeah, that's true. That's true. We have this problem on this show. We have it on our Volatility Views show. So many Aussies these days on the network. It's hard to line things up. But we're glad you could join us. I want to thank all of you out there, of course, for downloading, streaming, and subscribing, for sending in those questions. Keep them coming. And we'll see you back here next week for more of the Crypto Rundown.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC.